And we have in the studio Professor Kabiru Dandago, a lecturer of accountancy, Department of Accountancy, Bayero University, Kano. Professor, we are honored to have you in our studio.
Thank you for having me.
It was fireworks for the past 2 weeks. And why you are very important to this conversation is because you were able to spotlight something that many Nigerians were unable to. You know, people are just talking about the VAT and all that. But you picked interest on inheritance, right? How did you arrive at that? How did you, saw it in the document?
I have been teaching taxation for a very long time. When I joined the university as a lecturer in 1990, by 1993, it became very clear that we don't have sufficient staff for teaching taxation. So having undergone a training in that area, at the university level and at the professional level, I went for ICANN examination. I studied taxation again at the University of Lagos. So I had cause to write a lot of articles in the area of capital transfer tax. I even presented a seminar paper on that matter in my faculty. So you can see that I have sufficient background in the area. So, and I knew why capital transfer tax was abrogated during the military administration of General Sani Abacha. So when I was reading the bill, particularly the Nigerian tax bill,
yes,
I came across the income taxable, income profit and gain taxable. Then suddenly I saw this term, family income. And then some reference was made to culture and any other law in the country. And then they were saying that that income too is taxable. So then I said, if you go back to capital transfer tax, the income that may be for the family will be seen in two ways. Whether it is a gift given to the family or inherited wealth from the deceased. Because that provision is not talking about asset. It's not talking about asset developed by the family. And even if asset is developed by a family, we may have to relate that to business. Maybe you have family business where you are developing wealth, you are developing asset. So on that, income made by the family business, or profit made by the family business, or capital gain made by the family business, we know that one is taxable. But here they made it very clear that family income, not family asset, not family business. So that's why I say, okay, I'm suspecting the drafter of this bill, they were trying to bring in the issue of disease wealth, okay, into this law. Because as I said earlier, when you have something for the family in the form of income, it must be a gift. Maybe I just give you a family.
You dash
100. Before I die, I can say 100 family, 100 million. I'm giving this to your family, not to you, but to your family. So when you look at your family by definition, your parent will be part of it, your wife or wives will be part of it, your children will be part of it. So that one, when as I give you that money, I give your family that money, it has not been clear as to what will be you again, you as the leader of family, what will be the share of your wife, your children, and your parent. So that is one way of getting family income. The other way is when you as the leader, you die. So when you die, everything that belongs to you will revert back to the family members.
So if I understand, Prof, it's like you are trying to call for caution and call for more explanation.
Very good. Unfortunately, throughout the bill, there's nowhere where that term family income was defined.
So they gloss over it. They only mention it and
then keep quiet about it. So this shows that they are just waiting for it.
One of your fears is it that you are thinking if it is allowed the way it is, and then the patriarch of the family, who is the rich man, let me put it this way, he dies. You are thinking unless that aspect is clearly defined before the sharing of inheritance to his heirs. A certain percentage must be taken by the government.
We'll go to the government, yeah, because the bill has provided for rate to be applied on income, personal income tax. They have given the rate
starting from 10,
15% to 18,
up to 60, up to 50 or something like that.
No, that one is for the capital transfer, which has been abrogated. But now they have not captured it in the law. They all in the bill. They only captured the income.
Do you think it was deliberate? Maybe
I think it may be a mistake from the drafters of the law. They may not know that Nigeria will not understand what they are doing, or it may be deliberate. Maybe it is just there as a trap.
Have some people?
The moment it becomes law, then all the families in Nigeria will fall into it.
And that would be a recipe for chaos, right? Because if government is going to, and the person, the owner of the estate must have been paying taxes all through.
Yes, up to the time the person dies, he must be paying personal income tax, he must be paying capital gain tax, he must be paying profit on tax on profit that he makes. He may be paying it, but the moment he dies, so he will be living behind the wealth. So that wealth will be transferable.
Have you received any backlash after you made your presentations?
Nobody come up with any.
Nobody countered your argument?
No. The only comments on people are making is about the provision in the existing personal income tax that is talking about family property. And income is not property. And as the person that was talking to me about it, I made him to understand that is another mistake in the bill, which is very deliberate. I was accepting the bill, which is trying to show that the draft that what they are trying to explain is that they want to tax the rich,
yes,
and minimize the tax liability on the poor.
Is it true?
Is that true? That's what I'm saying, Nadia. If they are serious about that,
yes,
they should target properties. There should be categories of property that owned by the rich, which should be subjected to various levels of taxation.
So it means something fundamental is missing from those taxes.
If it is true that they really want to tax the rich and relieve the poor, one, the issue of VAT should not be there. Completely, because that affects the poor. No matter how poor you are, you have to consume.
We just displayed it on the screen that there will be zero VAT on certain things, hospital equipment, drugs, food, and all that.
Yes, but there are other things that are vatable. Is that not so?
Yes.
There are other things that are vatable, and then the market. There is no separate market for vatable product and non-vatable product.
And you can see it is there. There's a reduction of corporate income tax rate from 30% to 25% over the next 2 years, and elimination of earmarked taxes on companies to be replaced with a harmonized single levy at a reduced rate. Elimination of minimum tax on loss-making companies and those with low margins. Tax exemptions for small businesses, including WHT, that is, and then VAT.
Withholding tax.
Withholding tax, yeah. And 0% CIT, yes.
There we go. When you look at number one, it is just talking about the profit that company will be making or individual will be making. But the individual that are not making any profit, when they consume,
they will consume.
They consume goods and services.
Meaning they will pay tax.
They will pay tax. And then when they consume a product that claim not to be vatable, those that are selling the good, they will just be looking at what the vatable goods and services sellers are doing. The moment they increase their price, they also increase their own.
I attended a brief meeting where the spokesperson of the president was there, and then the head of the tax reform team, Oedele, was also there. I'm going back to the issue of inheritance. They said they were shocked when they saw your write-up, because there was nowhere they said they are going to tax the wealth of deceased and all that.
But
Would you have any answer for them?
You don't need to mention it. There are many ways of bringing in a plan that you want to implement. There are many ways. It's just about statement. So when they said family income, they should have defined it to tell us what they mean by that.
There should be an annex somewhere.
Every law has interpretation.
Yes.
So that terms that are heavy, terms that are not for common usage, I explain. But that has not been done for family income. So that is why, and the way the snook in issue of custom, other laws, that will make it very clear that what is meant there by family income is about the deceased wealth transferable to members of the family. And the thing that I want to is taxable. Then we say inheritance tax has been returned.
Through
the back door.
Okay, when I was reading your write-ups, I saw it somewhere. You're talking about for government to kickstart the economy, there must be some tax holiday or tax relief for SMEs. Am I correct? Okay. In this provision from these bills, you didn't see any attempt at reducing the burden on the SMEs, or in fairness to them, they have made some provision.
Yeah, you see, I personally, I am a supporter. I'm a taxman. Yes. I'm a student of taxation, and I'm proud of taxation. Okay, and I have the belief that taxation, a good tax system is what will make an economy to be well developed. But then when you are coming up with a good tax system, you have to be well prepared. You have to consider a lot of factors. And then you have to be very inclusive in developing the system for it to be well acceptable, for it to work very well for an economy. Yeah, it shouldn't be done haphazardly. You have to do it with a lot of care, with a lot of sincerity of purpose, with a lot of regard for all the categories of people in an economy. So the issue of giving tax holiday, doing this, doing that to the poor, all this is okay. Yeah, in establishing a good tax system, you have to encourage producers of goods and services. You have to develop many ways of encouraging them. And then you have to encourage the poor and give them hope as to how they could use the system to grow wealth, to become productive in the economy. But where you put aside some key issues that will bring the two sides of the economy, the rich and the poor, that is the deficit and the surplus side, you can't develop a good tax system that way.
It will not work.
It will not work.
Okay, now are you in tune with the plan to now amend or fine-tune these 4 laws at the same time? Let me read them. Is it just number 1, Nigeria Tax Administration Bill, right? Then Nigeria Revenue Service Establishment Bill, Nigeria Tax Bill, and then Joint Revenue Board Establishment Bill. Now, is it possible, or will you prefer to say that maybe government is starting with just one, let's say Nigeria Tax Administration Bill at a time? They are possible to do them together?
Very good. There is relationship. They are interwoven.
So they must be done.
Yeah, it must be done together. They are interwoven. Let's take the example of VAT. All the issues on VAT were contained in Nigerian tax bill.
Okay.
It is the sharing of the amount generated that is addressed in the Nigerian Tax Administration Bill.
Yes.
So and that is what is generating a lot of controversy, unfortunately. People are putting too much importance on that. The article I wrote, maybe you have not seen the second article I wrote. I was saying that emphasis should be on the increase in the VAT rate. We should emphasize more on that than on the sharing formula, because that is what affects all of us.
The increase.
The issue of increase.
Are you proponent of increase?
No, I don't support it. In that article, I propose that government should even scrap VAT completely, or put it maybe at just 2%
but
or 3%.
if it's scrap, VAT brings the chunk of the money.
Yeah, but there are other things that can bring chunk of money. There are other things that have not been covered.
Like what, Prof? Because
we talk about property tax. Yes. We talk about
Professor Tukur also.
We're talking about transactional tax. Transactional tax. We talk about the luxury asset tax. These three, the amount that they will be giving you will be about 2 times what you are expecting from VAT. But they have not been captured.
Why is the government looking the other way? Is it deliberate? Because maybe they are the owners of the estates and all that, and they don't want to be taxed.
That may be the reason.
So these are the questions that you think Nigerians should ask, not about increment of tax or sharing.
Sharing, me and you, what do you get when they share VAT? When they share the VAT to the state, what do you get? The money goes to the government. The governors collect the money.
So if you have your way now, because they have started sitting, especially the committee set up by the president in line with the National Assembly, Senate specifically, they are to talk about the sharing formula. If you are to advise them, because they will continue tomorrow and next tomorrow, what will you tell them to do? They should forget about this issue of tax, VAT and all that.
That's it.
To go back to some of the things that are not being taxed.
Yeah, that's it. Which will now assist in bridging the gap between the rich and the poor. Which will make the rich to pay more. They pay more, and they may not feel it too much. Because when you look at the transactional tax.
What is transactional tax? Yes.
Yeah, when you enter into any luxurious transaction.
Okay.
If they are rate, you can develop a threshold that maybe if you spend more than 10 million on some luxurious activities.
Yes.
Or some luxurious goods.
Maybe buy yacht or something like that.
Something like that. Aircraft. They are there. Or you go to
Lamborghini, you import.
You go to wedding ceremony.
Yes.
You see how people are flashing dollars, not even naira, and they are not paying any tax. They are even stamping on the money, killing the value. And when you collect the total amount, you will be talking about billion. Recently, there was a wedding in Kano, just for the bride to open her purse. They charge 25 million pounds, and the part of the bridegroom, they are able to pay immediately, whether they are joking or not. They have made payment. They have claimed that payment has been done. So $25 million. Right, when you convert it to naira,
it's huge.
It will give you about 50 billion naira. So if you charge that amount, maybe 40%, you will be getting about 20 billion naira. And that should go to government focus. And how much are you generating from that? That will give you 20 billion. Will
that also be of benefit to the North? Because I am putting this question finally together. The North is in panic mode. Is it worth it to be so panicky about changing laws in relation to taxes? And if going by what you said, to tax properties and all that, do you think northern states can stand on their feet?
They have properties now. Our leaders, for the politicians, businessmen, and they have properties.
You're talking about their malls, shopping malls. You're talking about
all of them.
Private houses, and then houses they rent out.
Houses. Well, we are talking about luxurious assets. The house that you are in, no problem.
You just get the ground rent.
That one can, But then you have estate with too many houses you are collecting rent. So this house, apart from the rent that you call it, pay property tax on the houses, on the estate. Pay property tax on the luxurious thing that you have. You have people riding flashy cars purchased at the rate of maybe 200 million or 300 million. They are not paying any tax for that. If they are to pay tax, a lot of money will be generated. And then the transaction, you say there are too many all over the place.
You have studied taxation very well. Is it true that in the 60s and early 70s, a lot of, the North was generating more tax even before independence compared to the South? Is it true?
Yeah, that time the Northerners were very productive, very honest leaders that may not be siphoning the money into their pocket.
So the groundnut.
The farmers were very, very productive, very sincere to the job, no much laziness. And so the total revenue being generated by the North is about double what is being generated in the South.
Is it laziness that the northern establishment is panicking now? You talked about the senators, House of Rep, governors, and all that. Yeah, shouting on top of their voices. They don't want the formula to be altered of sort, or they are asking for more consultations.
Yeah, frankly speaking, I don't want to go into the north side dichotomy. Okay. I want us to address the matter from the Nigerian perspective.
So your final words to the north and to Nigeria, how do you approach this?
Yeah, the bill should be amended. Items that are not proper for Nigeria should be removed. Okay. Items that are wrongly captured, they should be corrected. And then items that have not been brought into the bill to make this tax system very good should be brought into it.
Do you think the National Assembly can do this alone, or they should subject it to public scrutiny?
That's it. When they subject
they should go back to the drawing board.
That's a very good recommendation, that there's the need for public scrutiny. People should be given the chance to interrogate the bills and bring forward their own suggestions for improving its quality. Allow them to bring in ideas that should go into the bill in the best interest of the Nigerian people. Right. So these are things that should be done.
All right, thank you very much.
And no matter how long it will take us to do that, how to bear with the situation. We shouldn't be in a hurry.
Okay.
We want to have
it mustn't start on 1st January 2020.
No. That may not be possible.
All right, thank you very much.
It's going to be fair to Nigeria.
All right, thank you very much, Professor Kabiru Dandago from Bayero University. Kano, for your informed perspective on these contentious issues. And we hope to have you some other time. Thank you for coming to the program.
Thank you.
And viewers, we are going on a short break. Don't go away. The program continues in a moment.